Welcome to the Aramir Trading Group 1 meeting. Today is the 29th of March, the last meeting for the month. Welcome, everyone. I've been doing a couple more boxcar trades. I just put one on this morning. It was a smaller one. I normally do a 6-lot. I only did a 4-lot. I've had a pretty good month so far. Where's my browser window? I actually use this one, I guess. So, boxcar. Let me share my screen. This one. Okay, you should be able to see my screen now. All right, so the trade history. So I just put one on this morning. It's market sold off a little bit, but my short delta is only 12, so it's really not a problem. So if I look at just the last month, let's set this up for March. Now, the first part of the month, I was building out the spreadsheet on my own version from Dan's and getting ready for the roundtable presentation. So I didn't put any trades on until the 10th. So the month's not quite over, but we're about, I guess, 3 weeks. I had 4 trades. Just put the 5th one on today. That's for a Monday expiration. But 4 winners, so not bad. Here's the for each one of them. So on a $15,000 planned capital, it was a $1,900 of profit, or 12.72%. The one I just opened today, let me show that to you. It's here it is in option view. If I have any more, can I move this over? Oh no, I just I limited this, so you can use define to say how many days away you want to go. So let me just say 4 to 8 days. I might limit this. Oh, I need to put one other column over there. Maybe go 12 days. Yeah, there we go. So now I can get it over to here on the left. And it's got to pull data in from Thinkorswim. So this is auto refreshing. There's the break even. So right now it's down 60 bucks. But here's the trade. So we're the at the money, the spot price, this is the at the money strike. My debit spread's just 1 strike out of the money. I think when I started it, it was 2 or maybe 3. Let's see, SPX was at 46.01 when I put this on. Here's my spreadsheet. So we're down 7 points since I entered the trade, and that was, when did I end that? Look at my trade messages. Let's see, the trade messages are here. So I'll just look at today's trades. So that filled at 11:07. So if we look at 11:07, that's this is Ninja Trader, by the way. That would be Eastern and I'm Mountain, so that would be right about here is when I got filled. So you can see we're down a little bit, not too much. But the spreadsheet we're tracking, I just added this threshold thing. Now I had the P&L for like your targets, like 10% profit. So right now I'm at a 16% profit on the debit spread, so it's actually time to roll it. I don't know if I'll do it during the meeting or not, but the debit spread's got some decent profit, and you can see it's kind of keeping up with the losses on the credit spread at this point, mainly because it's so flat. I don't know if this is updating. Let me make sure. If I use a side by side, I know it always updates. Oh, I collapsed the wrong one. Okay. So yeah, here we are. So we're not quite at the long strike on the debit spread. But the delta is like 5.4. My guideline is +1 position delta for every credit spread you got. So I've got a 4 lot here. Margin on the trade is, if you just zing over here, it's 44.27, something like that. 44.30. No, it's the wrong one. It's this line. Minus 79.80 is the margin for this trade. And at 4 lot, that delta's fine. And you can see that P&L minus 40. That checks pretty much with the spreadsheet, minus 40. So here was my opening trade, and then I added the debit spread for 640. Oh, and then this margin's wrong, 79.80. Okay, so now that's all updated correctly. If you haven't seen this on the option chain, I added this. This is kind of cool. This is 0.2% above the cash price. So the at the money strike would be 45.95, and this is 0.2% above, so 2 strikes really. So I just had like 2 in the money strikes. But then I calculate for the top 50, and this is user definable. So like if I do 2, you can see that the total of the top 2 here is 138, and then this is 164. And then the median, half above, half below, is here. But if you use top 50, this shows, it calculates the median open interest and volume. And if it's above the median, then it's this light green. If it's above 3 times the median, it's the dark green. So you can see where the heavily traded strikes are. And I did this for a Monday expiration. So these are actually pretty good volume today. You know, in the top 50, we've had 5,300 trades made today. So that's pretty good activity. It looks like we're bouncing a little bit now. And we're only down 4. So really, I need to harvest this debit spread a little bit. So let's see, what should I do for that? I can just, I could do this kind of thing. Just take this off, move it down. Do something like this. And that should keep the margin about the same. So let me just do this kind of in real time while I'm talking to you. Where's my browser window? Okay, sorry, I need to do this. So I'm going to send out a trade message, and this is kind of the back end for what the expert sees. I'm going to roll down the debit spread. And I'll send that message out to everybody following the boxcar. And now I got to find the pricing. So I'll go to Thinkorswim, and I've got the strikes I want to use. I just put this option view in another window so I can see both of them at the same time. All right, so my debit spread's here. So I want to check these, and I want to sell this, buy that, and then I'm going to buy the 45.80 and sell the 45.60. And if you hold the control key down when you're selecting these, it'll actually build a thing like this. So here's my trade. So now I'm going to go back and send a message to the people following the boxcar of what I'm doing. So order, and then I just copy this, and I'm going to try and get a bit better credit than that. So let me just freeze it at 80 cents, or maybe 85. Best price. So this is like the order I would send out. So I'm going to send that right now. And then I will confirm and send this. Try and get filled. See, it's at 65, 70. It's bouncing around a bit. So I'll just take it down 5 cents, see if that'll get filled. Okay, there it is. It got filled. So then I'll just send a message back to the subscribers that was filled at 80 cents or 80-cent credit. So that's kind of how I run the trade alerts. I don't front run it. And this is all in a simulated trading count, so it's really not front running anyway. Did you click on the wrong strike? Well, let's see. Let me just analyze this and see what it looks like. It looks right. So I read $120 credit here. And then I like to monitor things in option view. So what I'll do is I come back into option view and commit this trade or convert it, and then go into the trade log and just update it. I name all these trades so I can keep them separate, because in the T log you can actually do this. So now these are the only the trades for that. And the commissions, I just set them for $1. And let's see, the 45.90 was at 32.80 and 28.50, 22.40. So now everything's all updated in Thinkorswim and in option view. And then what I do is, if you haven't added this, come on, option view, get over there. You just right click and go analyze trade, and then that adds it to here. And then after you've got it in your simulated trades, then you can save it. So you just export it. And then I've got this is the 4th of April boxcar. Sometimes they do 2 trades in the same expiration. So have the underlying, and then this is the first trade, the A trade. And that's that. So that just rolled up the expiration side over here by $80. And now the market's rallying a little bit. So I just need to update the spreadsheet at this point, but the modeling software is updated. The Thinkorswim is updated. And you can see we've moved back up a couple strikes already. So that's kind of how you do it. On the boxcar, it is a weekly trade, so you do have to do quite a few trades. It's not a trade you can just sit around at. You kind of have to watch it, and that's what the spreadsheet does. It kind of keeps the metrics that you're looking for, especially then the credit spread. So here's this. So now I have new strikes. I need to update this. So take these and copy them down here. Then I gotta go back to Thinkorswim and get my fill prices. It's handy to have multiple monitors, right? 45.90 was at 32.80, and the 45.70 was at 25.50. So there was the net. You can see it made $88 on the debit spread. And now I've got new strikes here. These are the 45.80 and the 45.60, and those prices were 22.40. So now you can see here that the position is still plus $23, plus 8, and I think I'm adding commissions into this too, so $1 contract. And the debit spread's down 5%. So if it gets down to 20%, we want to do something. So if it gets down to a $5.20 price, that's where we need to do something. So you could put a contingent order in for that. As far as the delta for the credit spread, we're fine. As long as it stays below about 19 or 20. And once it gets up to say 19, I think that's where Dan starts leapfrogging. And the leapfrogging is basically just like leapfrog when you're playing in school as a kid. You jump over the kid in front of you. So this strike is jumping over this strike. So, and then my annotation tool. So this one is jumping over here down to 3 to 4 strikes below that. And that will reduce your margin. That'll lift this up, flatten out your T+0 line, and kind of keep things under control if the market's heading down more. Okay, so that's the current boxcar that I've got, and again, the performance has been pretty well so far this month with just 4 trades, so this will be the 5th one. But it looks like it's gonna make money. And you can always go to this trading performance thing. So if you go to products, performance, this will go right to the boxcar performance. And you can see I need to update the P&L. So right now it's minus 26. And I can just edit that real quick. Minus 26. So now if I refresh this, it'll show a small loss. So anyway, that's how it's going. And yeah, I'm enjoying the trade. It's a little bit like the road trip as far as running a trade alert. And how many lots do you leapfrog? I think Dan does about a third. Um, Normally, on a 10 lot, he'll do 2 or 3 contracts, 2 to 3, 20 to 30%. It probably depends on how fast the market's moving. So if it's moving a lot, then you probably want to leapfrog more. But just don't do it all at once. It's like when you're making a correction on the highway, so you're changing lanes, you don't like jam the steering wheel all the way over. You just make a small correction. So the same thing with flying an airplane or a boat, probably just small corrections. So you just want to tweak it a little bit to cut the delta down. And you can watch this position delta as well, so that if it's over, let's see, right now we're a 4 lot, so 4.39 is perfect. If it gets up to say 8, that's probably getting a little high, and I want to reduce that. And so yeah, there's that. And I see Luke's here. Hey, morning, Luke, or I guess evening there. So you're +8, so almost 7 o'clock in the evening. Are you able to talk?
Hey
Oh, yeah.
Tom, how you doing?
Oh, good. Yeah, Luke and I have known each other for a while. I don't know how many years it's been, but quite a few. And we had a nice one-on-one yesterday. Luke was showing me around his trading stuff that he's doing for his fund, and we even kind of kicked the idea around of you having some kind of service for, um, I guess it's what, SPX, Spider kind of stuff, or
Absolutely. So it's truly directional trading using either DES futures, E-mini. You could even use the micros because it's the same direction and it's one-to-one, of course, with the ES futures. But alternatively, you could use ETFs like SPY, or you could use, of course, options, deep in the money options, to simulate a delta one position.
so that's
So
it's a directional thing you're doing.
yeah, so it's purely momentum based. And as we saw yesterday, so it's either using momentum, which can indicate markets moving up or down, or you can use some hedging, or you can use some contrarian components to basically complete the picture. So basically prepares for all kind of scenarios. And of course, the more volatile and the more direction, the more bias we see, the more trend we can detect, the better it is actually to put on the trades. A bad period, for example, was the week before last week, when it seemed to be trying to go down, trying to go up, and then fortunately it did nothing. But then I think it was like about a week ago, yes, then it started rallying, and then it went all long in 3 of the 4 components. So it made up for that small drawdown. So year to date, it's up about 5%.
Yeah,
So
I think
it's
the
pretty
the
active.
the compounded annual growth rate that you had was pretty fantastic for a directional system.
Yeah, yeah. But that's mainly due to the fact that it's pulling out of the market during, call it, dangerous periods. So then there is only 1 or maximum 2 that can go short. So if the market really has this tendency of showing this pretty steep, very quick and nasty recoveries, so rallies in a bear trend, then it could really hurt the performance. So that's especially when we need to be very vigilant to get out of the market as soon as possible. And by avoiding these kind of nasty periods, basically that is saving the performance.
Right. Yeah, so we're kind of kicking the idea around a little bit, but I just wanted to have you come on. Maybe I don't know. Can you show anything of kind of what you're doing to give people an idea?
Yeah, I can do that. Not right now because I'm on a different system, but I would definitely don't mind doing that. Sure.
Okay. Um, yeah, just it, it's very impressive, I have to say. So I know people here haven't seen it, but you've done a lot of work, and your background's fantastic. I think you were at Morgan, right, a long time ago.
Yeah. I was a prop trader at Morgan Stanley. Yes. So basically trading the S&P book. So S&P futures. Back then there were no E-minis. It was the big contract, so to speak.
Right.
And then the OEX and SPX options.
Well, great.
So it's a fun market. It used to be a very fun market. It still is, I think.
It keeps you on your toes, doesn't it?
It definitely does, yeah. Keeps you awake, keeps you young, I should say.
Right. Okay, well, any information that you have that you can pass on to people would be great. And
Sure.
then I guess we had talked about maybe some kind of presentation, or maybe next week
Yeah,
I'm
why
trading with
not?
one, or if you have time today, maybe even just log into the meeting with it from the right computer. We could do that too.
Okay, okay, very good. Fine.
All right. Well, look forward to hearing more with that, because I think people will be quite interested in it, because your results are fantastic.
Thank you.
All right. Well, let's see. I see Steve's here too. Steve Gantz. Steve had his first class a couple days ago, and I think that went pretty well. Um, uh, any comments about it, Steve? How's it going? Trades, all that kind of stuff.
Yeah, class is going great. The only drawback right now is, of course, butterflies. The whole goal of what I was teaching was butterflies in a higher volatility market. And of course, our volatility has waned a little bit with this solid climb up. Once again, the market just kind of defies me is, how in the heck can we be back at these levels? Given what's happening in the world and with interest rates, political climates, et cetera. So that presents a little bit of a challenge for the butterflies. But our first trade was a very good one. Our second one, we're struggling with a little bit because we're having to do more upside adjustments than I would like. And, butterflies don't handle upside adjustments quite as well for the most part. So, but we're muddling through that, and hopefully this market will slow down a little bit. We did put on another new trade today, another butterfly that's geared a little more toward neutral to bearish side of things, with the anticipation of a potential stall or pullback. But again, as we know, we can't control that. So that's kind of where we're at on that one.
Do you mind sharing us the position you just put on? Show
Oh,
how it's
not
doing?
at all. No, it's basically a flat fly. Let me look it up here. This is in SPX. It's let me open it up here in the model. So, and we're trading at the request of students. We're going to end up trading 4 lots in SPX. I also don't have the ability to share the screen, so I'm just going to have to explain this one. It's pretty straightforward. It's just a flat butterfly, 50-point wings with the center strike. And if you want to model it, you're more than welcome to. It's on a different computer for me.
Oh yeah, sure. Let's see.
So we're going to, this is for the May 20th monthly expirations.
All right, so let me get May going here.
Sure.
Let's see, I'm gonna have to get rid of this thing. Let's see if we can just delete them. And is that the May monthly?
That is correct. Yes, May monthlies.
If I go up 3, that should be enough. Oh yeah, I got a lot of options. Okay. How about if I do back trader? Maybe not. Okay. Oh, I've got all these weekly options. That's probably a problem. Let me just undo the weeklies. Yeah, no. Okay. And monthlies and quarterlies, we don't need those.
But you wanted to include the monthlies, didn't you?
Well, I'll put them back in, but you're just looking at a regular May expiration, right?
That is correct. Yes.
Yeah. So here we go.
There
May
you go.
20th.
That's it.
I just gotta
So,
pull it up.
so we are buying a 4,600.
Buying a 4,600, a 4 lot,
We're just doing a one lot.
a 1 lot. Okay.
And then we are selling the 4550s, two of them.
4550. Right.
And then we are buying one of the 4500s.
Maybe it's okay. It's getting prices. There we go.
Okay, so this is just a very basic flat butterfly. The concept here is that we are probably, again, nobody knows, but that we may be looking at a little bit of a stall in our market or potentially a pullback. So we're positioning this one with a little bit of bearish tilt. If our market does continue up, we're going to be layering into this. So if the market does continue up another, 20 points or so, we're going to add on another one. This is not going to be too different from like a John Locke bearish butterfly sort of trade. So basically, our premise here is, given where the market is, thank you for showing that. That's kind of the perfect, it shows we are kind of back at what has historically been a little bit of a resistance area. If we do continue higher, we will add more butterflies at higher price points on this trade. And again, with the intent that in the next 52 days, we will have some sort of a downdrift and pullback, and we'll look to capture some profits or potentially just adjust this trade by bringing up a wing at that point. So that's kind of where we're at on this one. Just literally just opened it. And then we also put on an earnings trade, which was a butterfly in Micron at the end of the day yesterday. And that one is just kind of a small, doing a butterfly around an earnings trade for an example.
Okay. And then how many butterflies do you have on? How big is your swarm?
Yes. Right now, we closed one out for about $1,000, $900 to $1,000 profit. The very first one we put on. The second one we put on, that's the one we're doing battle with. And right now we're down about 1,000 in that one. But again, those first two were put on really before the service started. So right now we have on just that second one. And then we put on one in Micron, and then we put on this one here this morning. So with the service just started technically on Sunday. And my goal is to put on one or two per week. And again, those are in different sorts of configurations. So the goal is to have many different date expirations and many different butterfly configurations so we can see how they act in different environments.
Well, sounds good. I guess next class is on Sunday, right?
Yes, coming up this next Sunday, and we have, 65, 70 students or so in it. And again, the feedback so far has been great. We've got some great discussions going in the forum, had some really good emails with students going back and forth as well. So yeah, right now it's all looking good. The first one was all about finding the right conditions to put the trade on during to where you have the lowest risk, and you basically have the odds stacked in your favor a little bit, if you will. So that's what the first class was about, was identifying those situations. Our second class, we're going to get into various different types of adjustments that you might consider doing with butterflies and how some of those adjustments will work better in some conditions than others. And then the alerts that go with this, I do a video alert. So at the time I send out an alert, that alert will have maybe a 1 to 2 minute video with it where I will show the P&L diagram. I happen to use ONE right now instead of option view, but I'll show that P&L diagram and provide a little bit of commentary on why we're doing the trade the way we're doing it. And then also likewise with the adjustments, we'll look at, well, we could adjust this with a vertical here. We could adjust it by adding something there. We could adjust it with a calendar, and we'll look at 2 or 3 variations. And then I'll make a decision that, okay, we're going to go with this one. And here's the reason we're going to go with this one in this specific case. So again, the whole purpose of this class is not it's not to teach a specific rule set. I mean, Amy does a great job with the A14. You do a great job with the boxcar, and those specific rule sets are great. This is geared a little bit differently to help people explore butterflies in general, and then all the different potential variations that somebody might consider for adjusting those. So again, it's not the typical alert service where we're following a set rule set. You know, if the delta gets to this point, then this is what we're going to do. It's more about exploring each individual trade and each individual position at a given time and how we evaluate that position, the good and bad of it, and then what we do with it at that point. So it's more the, I'll call it, it's more the art than the specific science in this case.
Makes sense. So the next class is going to be more about entering trades, I think.
No, the first one was more on the entering and finding the right conditions to enter and making sure that you are patient on your entry. I was a little bit surprised by the number of people that asked, well, why don't you just enter? You know, why don't you just go at market and enter? And the trades that I'm doing here, they're generally not that time sensitive. We don't have to get the trade on today. You know, we'll see where the market's at and we'll look at a given spread, a bid-ask spread, and we'll be at the very, very bottom of that bid-ask spread as far as, you know, we want to get, generally speaking, we're looking to put these on for credit, and we're going to want to get the most possible credit we can in that butterfly. And so we'll lay it out there and shop it, and we're looking for certain market conditions to help us get that entry. But if we don't get the entry on a given day, it's like, all right, that's fine. We'll try again tomorrow. It's more important to get that proper entry than it is to follow a specific set schedule, particularly because we're not looking to get a huge amount out of these trades. We're not looking to carry them into expiration. You know, we're looking to get in there and get our 5-10% and move on. And if we're only looking for that 5-10, if we get a good entry, maybe we can get 15, 20, 25% out of it. But generally speaking, we're looking at that 5-10%. If we're looking to get that 5-10% out of it, I don't want to give up 3% on my entry. So, right. You know, and again, our goal is to really not carry these things anywhere near to expiration. So we're keeping gamma risk way under control as well. And again, things have gone really well. In February was just shy of a 10% return for the month. March, we should wrap up tomorrow. It's going to be about a 6-7% return for the month, somewhere in there. And right now, I mean, I'm only using 25% of my account, but that's a total account return. But we don't have a lot on yet at this point going into April, and we do need the market to start cooperating a little bit, ideally getting some higher volatility if we're going to start loading into too many more positions.
So what's your plan then if you have you know, this type of market that's just grinding higher, maybe even coming back to the all-time highs?
Yeah, well, the plan there, quite frankly, is going to be, we're going to have to deal with that and probably do more of what I'll call these flat flies. And we may have to be, when we do get a little bit of a pullback day, maybe rather than waiting for a higher volatility day, maybe we just look at a little bit of a pullback day and we put on a broken wing, and maybe we have to put on that broken wing for a debit, which I don't like to do personally, but you gotta go with what the market gives you. But at the end of the day, I want my students to learn that, hey, if the market isn't right here, let's not force something. Let's put the bulk of our meat out there when the odds are in our favor. So if we have to wait for those right conditions, fine. Again, the class is all about education. So the other possibility is we spin back to some point in time and we go through some sample trades so that everyone knows when we do get back to that volatility, because of course we will get there again. Everybody knows exactly what to do and how to address it. So the last thing I want to do is to teach people to just put on a trade for the sake of putting on a trade. I want people to know that there's certain environments when those trades are going to be much juicier for you. And while we can put on trades in the meantime, let's put them on in smaller size. Let's put them on, let's keep most of our powder dry for when those conditions are right.
There's definitely value in having live trades.
Yes.
Even like Dan Sheridan used to say, dip your toe in the water. And when I was a new options trader, I was kind of, I was approaching it more like I was a physics major, so it was just a math problem to be solved. So, you're just trying to work through all the right math, but you're scared to put your money on the line. So you don't learn as much by back trading. You have to actually see how the markets react to real fills and real
Yes,
orders.
I totally agree with that. And that's why we are doing some of these, but we're doing them right now in a smaller size. And the class as a whole kind of decided that a 4 lot was a good number to go with. And again, our plan here is to probably phase into this trade if the market continues up. So eventually this could turn into a 4 lot trade as we build it out.
And I know it's been a long time since I've talked about option synthetics, but I wrote an article when I was working for Dan Sheridan. Oh, geez, it must have been about 10 years ago. And it was kind of a takeoff on Rush Limbaugh had a book with how things ought to be. So I said what everybody ought to know about option synthetics. And if you're not familiar with it, there's um, the synthetic positions. You have to understand that the basic relationship with puts and calls. So you've got the strike price plus the call price, the underlying plus the put price plus the interest and dividends. And for most of the times, the interest and dividends aren't really applicable, especially for an index.
Mm-hmm.
So it boils down to this. And the strike price is kind of arbitrary. So if you drop that off, it basically boils down to this. And this is in Charles Cottle's book, Cup. Call equals the underlying plus the put. But then it's just an algebra equation. So plus is long, short is minus. So you can just rearrange this any way you want. And my 8th grade algebra teacher always said when you're jumping across the equal sign, like she called it jumping the fence, you change the sign. And so that's why the picture of the dogs here, they're jumping over the fence. But you can use this to figure out what any synthetic position is. So if you have a, here they all are, all the 6 combinations. So if you have a short call plus long stock, you're synthetically have a short put.
Okay.
Or
Okay.
like a covered call, right? It's a short call plus long stock. So let's see, long stock plus short call. Where would that be? Short call plus long stock is a short put.
Mm-hmm.
So you can use these to hedge existing things or even close positions. So I had one time a long time ago, I think it might even be in here. Yeah, so I was trading the ZB contract, the 30-year bond futures. or futures options. So I had a long put at 118 and a oh, this is the one I need to close. So I had the, where was it? Um, I guess it was the 118, 113 strike vertical spread in the puts, but the bid ask spread was crazy. It was like, um, bid 150, ask 160. So you're like, well, how do you figure out what the price is of the spread and how do you get it filled without a lot of slippage? Well, basically, if you have a short vertical, I can use a annotation tool here. So here's your zero P&L line. So if you have a position that say looks like this, and the market is like way down here, so these strikes are crazy. This is like the $10 bid ask spread.
Right.
That would be in the puts, but the calls are trading for like 20 cents or 10 cents. So you can figure out what the call spread is. So basically, if you add the opposite call spread, it just neutralizes everything. So that just turns it into a flat position. So if you're long, say the 118, 113, let's see, 118.
Oh, I see what you're saying. And
113.
the bid ask spread is so crazy on that side, and you want to neutralize the position, you can go to the opposite side where the bid ask spread is much tighter.
Exactly.
And essentially flatten it there. Yes. Yes.
And you can also price the spread reasonably too. So, say this is trading for 20 cents and that's for 30 cents. So the mid price is 25 cents and it's a $5 wide spread. So now you know that the spread price for this one should be 475 on a $5 spread.
Got it. Yep. Yep. I see what you're saying now. I wasn't sure what you meant when you were talking the synthetics, particularly in SPX, because there's not a quote unquote underline unless you do a bunch of SPY or ES.
Yeah, you're just basically you're taking this vertical spread and offsetting it
right
different color with that's the same color.
Yep. To get spread. The total width of your one is the inverse of the other. I see what you're saying.
Yeah. So if you're short this put spread, or you short that put, you're long this call, and you're long, see, you're short this call and long this put. So at the same strike, you have a call and a put with opposite signs, essentially.
Right. Right.
And what that does is it basically, that's called a box. So there is no margin for that because they're just going to cancel each other out. So you could actually have multiples of these in your account with zero margin effect because there's no margin. The broker's not going to charge anything. And you can box things off and just let it go to expiration and it all just magically disappears.
Okay. Yep. Yep.
So that's kind of a nice thing. If you don't understand the synthetics, it's pretty easy to understand, but it's very helpful to know this cup equation. Because again, it's just simple algebra. If you need the call on this side to make it short, and move these over here, then you have short call equals minus U minus P. So you can define any of the synthetics very easily with this.
Okay. Well, thank you. Yes. I appreciate that.
Just thought it's been a long time since I talked about it. When I was at Shared Mentoring, nobody else liked to teach it, so I taught a class on it. But
okay.
Let's see, Alan, where is this at? It's an article I wrote years ago. Here, I republished it here, but it's very, very handy to know that. And I'll put that in the link for the recording too, because if you're not familiar with them, you should definitely learn it. And it's not that complicated. It's it all boils down to this simple equation. It's pretty easy to remember cup. And so I just thought I'd go over that. How to go? Well, that's on the blog, so that's free for everyone. In fact, if you just go to the Aramir public site and just search in synthetics, I'm sure it comes up. Yeah, there it is. First one. And then I had another article, I guess, a couple years later. So anyway, there's a couple of them, but that's the one that kind of goes over that C equals UP equation. Okay, let's see. Who else is here? No, Wayne's not here today. Let's see how the sleep well's doing. Sleep well. Let's see, I could go to the home page. It'll give me that overview. So it looks like the equities are basically even with the sleep well right now, and it's down 4% from the all-time highs, or I guess the current pullback's 4%. But it's kind of doing its thing. It did have a drawdown, but not quite as scary as the equities, and that's pretty typical for Wayne stuff. What else? Um, oh, these charts that I've got, it's from a company called High Charts. I think they're in Norway, but a lot of people use them. Like Vic Central, I think they're using High Charts. At least they were. Yeah, that's definitely a High Charts thing. If you see this little hamburger menu up here, that's probably a High Charts. This kind of stuff. Really nice charting stuff. It's all JavaScript, but I just bought a license for Aramir, so I'm going to be converting a lot of our charts to this. And I already did the on the performance. That was my first new one. This is a high charts one, and you can click on here and download the data. It's pretty nice. So that's coming to kind of clean up the look of some of the charts. Like this one, I think there's maybe even high charts for that. This one I'm using a library. It's pretty old, but it does a good job. Let's see, advanced stop, and I think that's it. Yeah, chart director. So if you're doing any coding and need a chart library, this one's been around for a long time, and it's a lot of different languages. So it's a nice charting tool, but the high charts, it's kind of more dynamic stuff, like with your mouse moving over. So it's a little bit more modern. So that's one of the things I'm moving towards, is getting those things updated. Okay. Any other news? I don't think we have any speakers this week. Let me look. Oh, now I'm not hosting this one, but the Raleigh Durham um, meetup, they meet on Thursday, and I always host their meeting. So Don Brady does a great job with that, and really encourage you to listen to their presentations, because they have really nice speakers, and it's always a good meeting. They do it once a month, so um, I always post the recordings too. So if you don't watch it live, you can always watch the recording. But those are always really good. So if you have time on Thursday evening, that's definitely something to do. And then you can see I use um, Rocky Mountain Flight Safety. Rocky Mountain Flight is the local aero club at Peterson Air Force Base, or now Space Force Base. I built their website, but I'm a pilot there. So they have a safety meeting, and you can set up these um, at a personal event. So if you have things you want to track and it showed up on the calendar, it just shows up blue like this as a private event that only you see. So I use this stuff all the time: doctor appointments, restaurant reservations. It's very handy. So um, that's a nice tool that's available for you. Um, so anyway, that's this for this week. As far as scheduling, there's no roundtable. All right. Anybody have any trades they want to go over? Questions, comments? Can the boxcar sheet send value-based notifications? Well, I don't know. I haven't done any Visual Basic for applications programming in a long time. I'm sure you can set up some kind of alerts, but I'm not super familiar with Excel programming. I kind of moved away from like C, C++, and VBA kind of stuff back to the web in the when was that? Early 90s, I guess. I got tired of trying to support multiple platforms. This person's got this much memory and he's having problems, or this one's got a different operating system. But the web, a browser's a browser. You don't have to worry about those kind of problems. So I haven't done any of that kind of coding for a long time, but I'll look into it to see if we can some kind of alerts. I don't know. it might have some kind of alert system built into it. I haven't really looked into it. If anybody is better with Excel than I am, and you know the answers, that'd be great. I'd love to hear from you. But I'd be happy to build it in if it's not too hard to do. Very handy to have this. Another question people have asked me is if they live outside the U.S., they can't get a Thinkorswim account. So can I get it so it inputs data from interactive brokers? And it's on my wish list or to-do list. I'm going to take a look at it. I can't guarantee anything, but you know, I'll do what I can. So yeah, that's yeah, Tom says maybe farm it out. Yeah, possibly. I like doing it myself to learn about it too, but yeah, I'll take a look. I think that's about it though. If there's no questions, I don't want to keep people here just for the sake of, you know, running up to an hour. So why don't we end the meeting? And if you want to catch up with Steve's class, the next one's Sunday, and he's sending out alerts along the way. So all the classes are recorded. So if you do want to join, you know, even though they've already had the first class, I'm sure Steve would love to have you join with the rest. So um, that's I'll just put a link in the chat for that.
Thanks, Tom. Yeah, and the first class ran 90 minutes. And then if you're in the alert service, we had about a 30-minute discussion on new trades coming up. And it'd be easy for you to get caught up at this point. And of course, I'm answering any questions via email and or in the forum as well from that first class.
Great. And I put the link in the chat there. So
thank you.
People want to join. Still a great time to do it. You know, and like I said, everything's recorded. There's a nice forum. You can ask questions, and it's yeah, I think it's worthwhile. So from what I heard, it looked like a really good class. So good job, Steve. All right, with that, let's end the meeting, and we will see you all soon.
Thank you, Tom.
All right, thanks.
Bye.